episode 9 of Copytraders Club, and today is a conversation with a guest who is something of a man of mystery. He goes under many aliases: the eToro Eviscerator, the Shock Jock, the Hypocrite Hunter, and my own personal favourite, the Coroner of Copy Trading. Here we go. Episode 9 of Copytraders Club, and you know who it is today. Hard to believe I've landed such a big fish already. It's only Andrew Hadden, aka FelixFallax, the leading YouTube channel for eToro enthusiasts. I'm a bit nervous he might spend the entire hour criticising me and pointing out my mistakes, but I can take it. Here he is now, looking around at the impressive entrance to the Copytraders Clubhouse. Be still, my beating heart. Andrew, welcome to Copytraders Club.
Delighted to be here, Gavin. Hello.
Well, we're delighted to have you. I think you, in fact, should be an honorary member of the club. But for now, let's get past reception and these pesky quickfire questions. Are you ready?
Ready as I'll ever be.
Okay. Username on eToro.
FelixFallax.
Date you joined eToro.
26th of May 2019.
Year of birth.
The latter half of the 1970s.
Place of residence.
It'll be Edinburgh, Scotland.
Profession.
Careers advisor.
Here's a new question. Briefly state what you aim to achieve on eToro.
Basically to build a 5-year track record of solid gains with moderate risk, and also to build my reputation in terms of the eToro community and the YouTube community.
Name one of your investing heroes.
Jack Bogle.
Name one of your favourite investing books.
That would be The Little Book of Common Sense Investing by Jack Bogle.
That completes the formalities. To the VIP lounge now. Andrew Hadden, aka FelixFallax, are you ready for this magical transition?
Yes.
So here we are now in the VIP lounge, Andrew. You say you're from Edinburgh in Scotland.
That's right, yes.
And you're a careers advisor. Does that mean you're doing what you love?
Yeah, well, I do enjoy anything that involves helping people and mentoring people. So I'm mainly working with adults at the moment, and have since I qualified over 10 years ago. And yeah, I think there's a lot of transferable skills between that and, funny enough, investing, and also YouTube and the other things that I do. So yeah, I really enjoy it.
I thought you were going to be telling me you're a careers advisor to kids in school.
No, sadly not. I can't really be done with unruly behaviour, so it's kind of adults is where it's at, as far as I'm concerned, but definitely all age from 16 to 65, or even beyond.
Okay, so tell us about how you got started on eToro.
Yeah, well, this is an interesting one. It's basically from 2013 to 2019, I'd be merrily investing away on my share ISA with my bank and paying, extortionate commission and currency transfer. And then one of my friends kind of told me about eToro, and also had seen it advertised, the Trade Like a Steve advert. So I thought, well, a few reasons really. Number one is commission-free trading. Number two is eToro did crypto, and I was finding out a bit more about crypto at that stage. Obviously, very late to the party, starting crypto investing in 2019. And also the copy trading aspect. I did know of that, but it wasn't necessarily the complete draw for there. It was probably those three things: commission-free trading, the crypto trading, and also the copy trading aspect. But mainly commission-free was probably what drew me there.
And you say you saw the advertising. I notice eToro is all over the football in the UK.
Yep.
You see those signs. Is that where you saw it?
It's probably television adverts, actually. But basically, it was one of my friends in the pub had sort of said to me, because he knew I was into investing and I had shares, just, buy and hold investments. And he just said, have you ever thought about eToro? You can copy people, you can do their trades, and, you basically match their trades. It doesn't cost you anything. And when they trade, you trade, no work involved. And also I had been watching videos on Bitcoin and stuff like that, so I knew that you couldn't trade that with a bank. So those were definitely the main two things that swung me towards the embrace of eToro.
So it didn't come to your attention when you were watching your beloved Hibs?
Hibs? No, I'm actually a Glasgow Rangers supporter. So, but I spent some time working in Glasgow as well. But no, Hibs definitely were not a factor.
All right. Well, as anyone who knows your videos knows, you display very penetrative insights into PI behavior, and some people would call it criticism, and it is criticism in many ways, constructive criticism.
Definitely.
But before we get into the realm of criticism and to what you're known for and what the listener is eagerly awaiting to hear, before we get into that and you shining a light on the shortcomings and inconsistencies and hypocrisy that you see, I'd like to hear some unadulterated sunshine from you. Sunshine on Leith, you might say. Can you now pontificate for 3 minutes and 22 seconds about only the positives of eToro and copy trading?
Yes, well, thankfully that's not too difficult to do. I mean, I've heard eToro copy trading described as a win-win situation, but I would actually describe it as a win-win-win situation. I'll explain what I mean. From the copier's point of view, which is someone like yourself, you're basically able to copy the trades of a seasoned investor who hopefully can beat the index funds such as S&P 500 and Nasdaq over a period of time with reasonable risk and very strong communication in both directions. So you're able to do that with no fees that you would get with a mutual fund or a hedge fund. There's no costs in addition to the spreads, which you would get anyway if you were doing your own trades. So it's a fantastic deal that someone's basically making trades and making money, and you're making exactly the same profits as them in theory anyway, and you don't have to pay anything for it, and you don't have to do any work beyond the initial copying. Although, as we know, it's a little bit more complicated than that, but that's the theory. So it's a win from the copier's point of view. And then if you look at the PI's point of view, it's also a win from their point of view because they are essentially getting paid, in some cases, massive amounts of money to manage people's investments. So they're just doing the trades that they would be doing if they had their own bankroll anyway, and they're getting profits from their own trades. But in addition to that, they're getting paid up to 2.5% commission on the assets under management that they've got. So it's a fantastic deal for a PI. I could see why they would be attracted to sign up for the PI scheme and to escalate up the ranks. And also it's really quick promotion. Some PIs can really drastically boost their salary from the minimum of 400 per month up to earning over $1 million a year, and at the very top end. So it's a fantastic progression opportunity for the PI. And then the third win is for eToro themselves, because they are taking a cut every trade that's done. They're taking a cut off the spread on there, and things like overnight fees for CFD positions, people using leverage. So eToro is making money there, and various other ways that they make money. So it's definitely, obviously, eToro, is a profitable business. It's now about to go public. So really, yeah, it's a win from all three perspectives: the copier, the PI, and eToro themselves. Everyone's winning, which you don't get many situations like that in life. Mainly, one person's giving and one person's taking. Whereas in this, all three parties are gaining out of the arrangement, which I think is absolutely fantastic. So that is what I really like about eToro.
Well said. Well, but in the win-win-win situation, who loses? Somebody has to lose outside of those three.
I can answer that one for you. Essentially, in the stock market, as you know, most investors lose money. So although when I'm talking about winning PIs and I'm talking about winning copiers for an eToro winning, there's always going to be people who are making losing trades who are coming in at the top and leaving at the bottom. So within the stock market as a whole, if you take the group of everyone who's trading on stocks and shares in the entire world, most of those people are losing money in the investments, and they're losing that to the winning traders, which is the PIs. And also because we're copying PIs, it's us as well, and eToro. So yeah, that's where the money's coming from. It's coming from people who are investing in the stock market and who are buying shares at their high point and selling them at the low point. That's where the money's coming from. So essentially, it's coming from partly from outside of eToro's ecosystems, coming from the New York Stock Exchange, but also partly from, there are still a lot of people on eToro that lose money. So it's a transfer of, as Warren Buffett says, wealth from the impatient to the patient. I must say I'm not the most patient person, but that's in theory how it works, is it's transferring from losing traders to winning traders.
And who else loses? I guess we're talking other brokerages that charge fees historically, old-fashioned brokerages. In the future, everyone might have an eToro account the way you have a bank account. It's a highly disruptive force. In 10 years from now, the other losers could be much clearer.
Exactly. Well, the share dealing account I had before was getting away with charging £12.50 for every trade that I did, no matter what size it was. So if I bought a share in Apple for £100, I'd get charged £12.50 for that, with 12.5%. Obviously, I wouldn't do that. That forces you to trade in much bigger sizes. And in addition to that, they also charge a currency exchange fee of 1.25%. So if you think about it both ways, that's 25 quid plus 2.5%. So you need to be trading in large amounts. So yeah, that's where eToro is forcing businesses like that to really rethink their business model. Although I don't think they're listening, because they've just put their ISA fee up to £36 a year at the bank that I'm talking about there. So yeah, I think eToro is causing major issues for these traditional investment institutions that are charging ridiculous amounts of commission and fees.
I saw in one of your videos you mentioned that people accuse you of being an armchair critic. Are you an armchair critic?
Yeah, well, there was one person that said that in particular, but I think that what he was trying to get at was I didn't have a stake in the game, in terms of I'm not currently a PI and I'm not currently copying any PIs. So I'm just kind of sitting on the outside throwing stones and, and kind of criticizing. But what I would point out is last year at one point I had a PI portfolio of over $100,000. And although I've never been a PI yet, I mean, I think it's important to build up a track record before joining the PI scheme. And also that creates conflicts of interest if you're doing YouTube channel criticizing PIs. So I've refrained from applying for the PI scheme because of, those issues of wanting to build a better track record and also wanting to remain impartial. So yeah, I think that it's difficult not to be an armchair critic. So I either shut my mouth and not say anything at all, or I will comment and risk being called an armchair critic.
But isn't the point that PIs are under an obligation not to discuss other PIs' activities? Certainly not to badmouth them.
Yep, I believe that is, it's kind of somewhere on the eToro kind of guidelines.
Given that that's the case, what kind of critic can there be other than an armchair critic? You're either in an armchair not being a PI criticizing, or you're a PI and you're not allowed to criticize.
Exactly. And if you look at other industries, say like the football industry, there's football journalists. Now, many of these people have never played the game before, but that doesn't mean that they don't have a valid opinion on players or managers or clubs' performances. They're established journalists. Essentially, that's what you and I are. Not professional, but we're amateur broadcasters and journalists in a sense. We're creating content, and when you're doing that, you don't necessarily have had to be a professional at the discipline that you're creating content on. So I don't necessarily need to have worked within a financial environment to be able to make videos talking about finance. Many of the best people are self-taught. Like Jay Nemesis, for instance, is self-taught. He doesn't have a financial background or qualifications and professional qualifications in investing.
And the other question is, what do the PIs expect? That they shouldn't be subject to inspection and analysis?
Yeah, well, I think that we'll probably talk about this later, but it comes back to I got a little bit frustrated last March when everything was kicking off about some PIs were not behaving the ones that I was copying were not behaving in a straightforward and honest manner, and lost some of my money. So I kind of thought, it'd be nice to highlight some of the best PIs and also highlight some of the ones that I don't think are very good, so that other people could avoid what happened to me last year. That was really the main motivation behind me sticking my beak in to PI business.
I mean, these people, as you point out, some of them are handling or are responsible for large amounts of money.
Very large.
And their decisions are affecting thousands of lives.
Mm.
And it's a public forum. So they have to expect to be subject to far more inspection and analysis and constructive criticism, and to be under the microscope far more than traditional money managers would.
Yeah, definitely. When you join eToro and then you make your profile public, and then you join the PI scheme, and then you're getting paid for doing that, you're getting up the ranks. then there's a great level of accountability and responsibility for your actions. You can't just kind of say anything you want and do anything you want. You can't sort of down tools and walk away and not communicate with your copiers, or put all your money in one stock and stuff. There's limitations and there's rules to what you can and can't do. And then if people are flouting those rules, then it's only fair that me or other people should be saying, wait a minute, what's going on here? That person's just broken the rules. Maybe I'm a frustrated policeman or traffic warden or something. I don't know. Maybe that's what I should have been doing. But I think there's a lot of investors that maybe would not realize things. So I'm just kind of trying to help people to not make some mistakes that I did, not just to do with copy trading, but investing in general. Just trying to help pass on any knowledge that I've gained. Not saying I'm an expert, but many people are beginners, and I was a beginner once. In many ways, I'm still learning. So just passing on that knowledge free of charge, and people can take it or leave it, and they can view other videos and content and decide what they believe and what they want to give the greatest weighting to. But it's never financial advice.
That's interesting that you should say that, because when I began watching your videos, I was fascinated at all these factual things that you were pointing out.
Yep.
Inconsistencies between the bio and the behavior, or people playing with the stats and saying, oh, since I joined, I've got 1,000%.
Yes.
But you look back and realize most of that came in week one, with a tiny amount.
Yep.
5 years ago. Things like that. Those little nuggets of factual information were an eye-opener for me. And so I started thinking, oh, this guy, Andrew Hadden, he's the authority when it comes to all this stuff. And then the more I'm watching your videos, every now and then you'll say things and I'll think, oh, hang on a second, that doesn't smell quite right to me. And I realized that I was having a hard time distinguishing between fact and opinion.
Yes.
In your videos. Talk a little bit about that.
Distinguishing between fact and opinion. Yeah, well, there are some things that are fact. Like if a PI says the minimum copy amount is $3,500, like a certain person at the moment, and in actually fact it's $2,000, then that clearly is factually wrong. Whereas the subjective bit is, if I'm speculating, is that person deliberately misleading people to boost their AUM, or is that person simply doesn't understand how eToro copy trading works? But as you'll see, neither of those are good outcomes. If someone's either been deliberately misleading or someone's incompetent, essentially, then those are not good things. But yeah, obviously there's things that I get wrong as well. Sometimes many things that I get wrong, I'll kind of wade in and I'll have missed something crucial. Maybe I'll be saying, how come that person did that there? And there's an important fact that I don't realize. I mean, mainly in fairness to me, it's because the eToro stats don't tell all the story. Like if someone made 100% in 1 month 3 years ago, I would sort of say, well, that's probably crypto or leverage, but it may well be that it wasn't. It might be somewhere else, but I'm just kind of taking an educated guess. But I usually try and say if I'm making a guess or an assumption, and I'll say other ones where, right, I'm absolutely sure of my facts here. I know what I'm saying is true. But yeah, there's obviously blurred lines because it's how you put it as well. Like I could say, I think this is disgraceful that that person's done that, when in actual fact, it might just be slightly suboptimal, or it might be not to my preference that they've done that, but it's not necessarily a disgrace. So I guess there's an element of being a shock jock and kind of saying that, look, this is terrible. This person's put all their money in one stock. They should be thrown out of eToro. But that's just my opinion. Other people wouldn't have a problem with that. And I know there is actually a groundswell of people who would like to be able to copy PIs of any risk score, even ones that are risk 10, and they think that these people should be copyable, and they'd be perfectly happy to risk their money on that. So I guess it's not really for me to tell them you shouldn't think like that or you shouldn't do that. Although I would point out that there are financial regulations, and if eToro was the Wild West where anybody could just do anything they liked, then I'm sure it would get closed down, or it would lose its regulatory licenses if some of the stuff that people think should be allowed was actually allowed.
Yes, and your opinions, when they're expressed like that, when you're talking about elements of the platform and when you're studying PI data, that's one element of the opinion. But the other point that I was thinking of was sometimes your investing style slips into your videos in a way that if you're not paying attention, it sounds like fact when it's in fact opinion. You know what I mean?
Indeed. Although I would say it depends on your perspective. You could say it's like if I'm saying someone is taking an outsized risk or whatever, this is too risky behavior, that's based on years of academic theory about investing and about portfolio management and stuff like that. But yeah, obviously these are only theories. They're widely accepted theories.
But the point is, we as commentators, we necessarily, when we're talking about these things, what we say is colored by what we've read and our background and all the rest of it. So everything is through a lens. And I think we as consumers of commentary have to listen to them with that in mind. Take, for example, the things that Victor and I talked about where we differed from what you often say,
Yep.
such as length of track record on eToro.
Yes.
When I started watching your videos, or certainly part of me was thinking, yes, definitely length of time on eToro is an incredibly important thing. And if I add any more PIs to my initial one,
Yep.
they're going to have a long record and have proved themselves. That makes perfect sense. But then in practice, I didn't really do that. And Victor found himself disagreeing with you on that. Well, my only point is that when I'm listening to people, it took me a while to work out what was fact and what was opinion. That's not a criticism of you, of course. It's just me as a listener. It's important to be alert to these things.
My view that would be that it is a matter of fact that if you've got 5 years of data on someone and you've got 1 year of data on someone else, then the one you've got 5 years of data on, you're going to be able to make a more informed decision.
All else being equal, yes.
All else being equal. Yet there are people like Robert Merck who you copy, who's obviously got a YouTube channel, so that's additional weight that you would add to his investing record. If he had just had that record in eToro and didn't ever post and didn't make any YouTube content, then I'd be saying this was a major risk. But given you've got that extra info coming in, then you give him extra credibility. Alan Mullins as well, Logic Fool, he's got a 17-year track record, KPMG audited performance. So although he doesn't have very long on eToro, he does have extra clout that he can add. But my main point was, a trap that a lot of people fall into, and I don't think it's really opinion, is that last year they can't get away from the fact that Nasdaq made almost 50% profit, and Tesla and Neo were up by over 1,000%. So there's some people that literally just bought Tesla or Neo and they made over 100% profit, and people are waiting and copying them and saying this person's going to make 100% per year. Now, and I'm saying, well, no, they're not.
Absolutely, it is very much the biggest danger that faces a copy trader today is picking some guy who's done brilliantly recently, but not because they're brilliant.
Yep.
Just because of a perfect storm of events has caused their short track record to look phenomenal.
Yep.
But they are no phenomenon.
Exactly.
If you've got a portfolio full of those guys, you're really playing with fire.
Yep.
So certainly a track record on eToro is a very useful way to filter those guys. It's one tool of several available to you. It's not the only thing. That's all I'm saying.
Yeah, you made a good point there about some people getting the results through skill and knowledge and other people through luck. I mean, I'll give you an example of that. Is an investor called Ishfaq Pirelli. He invested in GameStop. He is a very, very good investor, value investor. He just happened to invest in GameStop. He made, I think, over 100% profit in January. So he's an example of a GameStop investor that has really, really good track record, and he's clearly a good investor. Whereas there's other people at the moment on eToro who are 100% in GameStop and they don't know anything about investing at all. They're not PIs, obviously, and for the main part anyway. So yeah, if you look at the results, you might think that Ishfaq and this random person investing in GameStop were the results are the same, but there's a huge difference if you look at the other aspects. So yeah, what's the challenging thing is a lot of people made 1,000% on Tesla last year that actually are really, really good investors, like Mariano Pardo and various other people. Whereas there's other people that made 1,000% on Tesla just because everyone else was talking about it. They've just slammed a couple of $100 in, and they won't be able to replicate that performance. So yeah, it's our task to work out, is that sustainable or not, by looking beyond the stats.
Sure. Well, we do have to work all that stuff out as copy traders, which is where content like yours and to a lesser extent mine comes in very handy.
Yep.
An essential part of it, really. if the listener hasn't yet checked out your videos, then as soon as they've finished listening to this show, they need to jump onto YouTube and check them out because they're a great education.
Thank you.
And I hope you continue making them for a long time. But it seems to me there was a time not so long ago that you were a bit disenchanted with things. And I feared that maybe you weren't going to continue doing what you do. Can you tell us a little bit about that?
Yeah, well, there was a time kind of last December. I had a plan that this year what I was going to do was that's why I was making the YouTube videos, was to do a PI portfolio and to track the performance of that portfolio over a period of time, over the whole year, the whole calendar year. And one of my ideas was to do it with $100,000, which never been done before in history by anyone, and have that kind of tracked on YouTube. But then I was really kind of enjoying doing my own trades and stuff like that. So I thought, well, why not have the best of both worlds? Why not keep some of my money in my FelixFallax account and transfer some of it into another account I've got, a second eToro account, which many people have two accounts. So yeah, I made an attempt on early December to transfer the princely sum of 10,000, which I thought would be a good kind of PI experiment to do into 2021. So I made an attempt to transfer that on early December, and by the 5th or 6th of January, I was still waiting despite several prompts and several assurances that it would be transferred. So yeah, I thought that, if you're going to do a proper experiment, you have to do it from January the 1st to December the 31st. There's no point starting it in mid-January. So I jacked that idea in and just thought, sod it, I'll just do my own trades. So yeah, currently I don't copy any PIs, but I was never in any danger of leaving eToro. Absolutely no danger of that. And also was never in any danger of stop making YouTube videos altogether. It just obviously gives me a little bit less motivation to make YouTube videos about PIs when in the near future I don't have any intention of copying them. At the end of the day, I have got a big skin in the game, so anyone that does copy me or anyone that listens to my opinions on YouTube, I'm not sitting with a virtual account here. I'm actually investing real money. So I think that at least you've got to give me a bit of credibility that I'm talking about stuff that I am actually investing in myself.
You've got a ton of credibility. Don't worry about that. And it would be a terrible tragedy if the FelixFallax channel didn't continue to deliver what it does.
Yeah, definitely no plans to close the channel.
Hey, hope you're enjoying today's show. I'm sure you've subscribed already. If you're a successful copy trader, happy to share what you've learned. There's no need to have a public profile. Please get in touch. Otherwise, listener, the bigger the club, the better for you. So tell people on eToro about this show. Ask your PIs to come on. That way you will get to know them better. We build this club together. I'm surprised we've gone as far in this conversation as we have without me asking, who is FelixFallax? Is that the guy in your avatar? The black and white picture, the mustachioed man from the Victorian era?
Essentially, yes. 'Cause what it is that when I was at university many years ago, my lecturer was quite big on philosophy, and one of the philosophers that you talk about is Friedrich Nietzsche, who's long dead. And apparently, one of Friedrich Nietzsche's pen names was FelixFallax. It's a pseudonym, so I used that as my poker username on a poker website, and I used it on a couple of other things like forums. So yeah, when I joined eToro, I mean, in hindsight, if I'd been planning to be a PI, which I wasn't when I joined it, then I would have just called myself Andrew Hadden, like many people have done. P. Kirk Bond or whatever, Mariano Pardo. I just call myself by my proper name. But back then, I wanted to kind of be a bit more anonymous, so I thought I'll need to call myself a nickname. So it was either that or the Moody Blue, which is my second eToro account. So yeah, that's where FelixFallax came from. It's Friedrich Nietzsche's pen name, I gather, although I've Googled it and can't really find any evidence, but my lecturer assures me it was, and he's a Nietzsche expert. And yeah, the picture is Freddie Nietzsche.
Very good. Well, that's the first Neitszche we've had mentioned on the show. Hopefully the first of many. So part of the reason I want to see your channel continue and thrive, and part of the reason that I'm doing this, is I think it's a very healthy thing for all involved, that there's a wide range of commentary outside of the eToro ecosystem.
Yes.
They can't possibly try to limit it to within themselves. I know it's a social trading platform, and yes, there are feeds to discuss things on, and you look up certain tickers and see what everyone has to say and all the rest of it. But there's no way that they would be able to contain everything within that system. Do you agree that it's healthy to have many different people talking about it all on various different platforms?
Yes, well, one of the main players in that field was or is Thomas West, or Tam West as I call him. His YouTube channel, brilliant instructional videos on how to use eToro. But one of the reasons why I set up the channel was, there was things that Thomas wasn't doing, or maybe I felt that I could do it in a different way, like reviewing PIs. He does review PIs, but not in the same style as me. And in the same token, you're doing stuff. Maybe we'll come into that later, but you're doing stuff on your podcast that I'm not doing, like interviewing people. So I think there is place for these different people where I've got quite a confrontational and opinionated approach, whereas Thomas West is very laid back and a friendly guy for beginners, and his videos are explaining concepts about eToro, and he's got really good production values and visuals on his videos. And then you're doing a podcast, which is a different medium, and a very conversational interview approach. So we're all doing different things, and obviously got Steve Moth Copy Trading and many other people, Victor Zhang, who you've heard on your show, have got YouTube channels and stuff like that. And I think it's valuable to hear from all the perspectives, not just one type of person.
Yes, one could adopt many approaches. Another way of saying that is there's many ways to skin a cat.
Yep.
And you say that on your videos a lot, that there's many ways to skin a cat, which is obviously an horrific image to plant in people's minds,
Yes.
that expression. And I've decided I'm not going to say that. It comes up a lot when you're talking about copy trading and eToro. There are many different approaches to a variety of things. So I'm going to invent a new expression that doesn't put in the listener's mind the picture of a poor suffering animal. And that is, there's many ways to peel an orange. Does that work for you? No, I'm going to say that again. Damn it, that was wrong. There's many ways to eat an orange.
Yeah, well, that's an interesting analogy, but I definitely, in terms of copy trading, I think you're right. I'll give you an example. Is that you've got Jay Nemesis, obviously very successful trader, and he does thousands of trades every year, very frequent trader. Some of them are to keep in sync, and some of them are just because he's an active trader. Whereas you've got other ones like Spark Liang or Shay0327, who almost never do any trades at all. And in some cases, like Spark's case, he's sitting with was sitting with half his money in cash. So they're both valid approaches. Buy and hold investing, active investing. People who short the market, people who never short the market, like Yeppy Kirk Bond never shorts. So yeah, all of the styles can be successful. It's more a case of how skilled is the exponent of that style. Yeah, there's no one way to make money. So I definitely wouldn't want to be saying on my YouTube video, this person's doing too many trades or this person's not doing enough trades. And that's one of the reasons why I don't use scoring systems. I'm not going to score people by how many posts did they make last week, or how many trades did they do, or what's their average position size or whatever, because there's some people that have got great success by having a very small portfolio of only 10 stocks, and there's other people who have got hundreds of stocks. Both of the approach both of the approaches can work very well.
As we touched on in the recent episode with Steve from Moth Copy
Yes.
Trading, who is very much doing that scoreboard
Yep.
approach, which if it works for him, that's great. But it is a very broad arena to try and compartmentalize into marks out of 10. That's a very difficult thing to do.
Yeah, well, that's the main problem. I'll give you an example of why this can be a problematic. Is that Steve and also another gent who I won't mention, the one that called me an armchair critic. But yeah, if you use a scoring system of a PI's communication and you rate it on how many posts they made, someone could be posting absolute garbage, and some people do. So they have hundreds of posts, but they're absolute nonsense. Whereas other people, like again, I'll use Yeppy Kirk Bond, has very rarely posts, but some of his posts are life changing. Like he's got a video on shorting the market and why he doesn't do it. It's only a 1 minute, 20-second video, but this is a really impactful post that really kind of changed my perspective on investing. So I don't think it's about how many posts you do or how many trades you do or what your biggest and smallest position are, how many items are in your portfolio. Any of that stuff is not important to count the numbers. It really, I don't think it tells you much, but other people do find value in it. So that's fine. It's more quantitative analysis versus qualitative analysis. You could say that's a quantitative method of measuring a PI, whereas I tend to do qualitative, although I'm still dazzled by the stats at times. But I think that we really need to look beyond stats and the figures, and then think about the quality of someone's investing and someone's personality.
And the timing of this episode going out is interesting. It'll probably go out early April 2021. And I don't really want every episode to be very specific in terms of time. But one of your videos that I watched in the last couple of days details why April 2021 is an important month on eToro. Do you want to explain what that's going to do to the stats and how that's going to change the complexion of certain PIs?
Definitely, I can explain that. I can use my own stats as an example. As last March, I what we would call got clattered, in that I sustained 30% drawdown, I think, and I had a reasonable amount of money in there. And in fact, the daily drawdown, I think it's still on there, was like 12% in one day. Partly due to being long on tech stocks, partly due to being in bad PIs. Really everything came wrong at the one time for many people as well. So that's still on my record. If you looked at my record, you would think this guy's bloody awful drawdown. But in April, this is going to reset, and I believe it's going to show me as having less than 10% drawdown in all three of the stats. So it's going to make me look from being a absolutely atrocious investor into someone that's maybe barely competent. And I think it's the same for a lot of PIs as well.
Because the statistics are for the previous 12 months. And we're about to exit March when all the damage was done.
Yeah, a lot of people got absolutely slaughtered last March and lost a third of the bankroll, sometimes even half their bankroll. And that's on the record at the moment, but that's going to shift off on the risk score as well, not just drawdown. The risk score and the drawdown for that, in April, their last March's performance is going to be wiped away. It'll still be on their green bar chart, but the risk will be gone and the drawdown will be gone, and people's stats will be looking a lot better. And I do think copiers actually take that into account, because if you look at someone like Richard Stroud, he's got a ton of copiers. His results were not outstanding last year, like maybe he got 50% profit, but so did a lot of people. But the thing was, his drawdown was 3.5% or something. So I think that makes Richard Stroud look brilliant. But now a lot of the other investors, like your Mariano Pardos, your Yepi Kirkbonds, they're sitting with 30% drawdown, but that's going to go down a lot lower, like maybe 7 or 8%. And that's going to make them look a lot better risk reward compared to Richard Stroud, for instance, than it does currently. So it's just something to bear in mind. Thankfully, it doesn't stay on your record forever. Otherwise, I'd be stuck with that horrible 30-odd% loss.
One thing I often wonder when I'm watching your videos is whether eToro eyes are also watching your videos. Do you know for a fact that they are?
Well, yes, actually. I know that the PI team, because I got an email from them last year at one point saying that they were enjoying watching my channel. So I actually did have a Zoom call with some of the members of the people that manage the PIs. Had a really good chat to them. I also had a chat to the product development team at one point, just to exchange ideas. Because as well as being on YouTube, also I'm Platinum Plus customer. So I think eToro are keen to have feedback from customers who have got a reasonable amount of money invested in the platform. So they sort of ask, what improvements would I like to see, or how's my eToro experience so far? Am I enjoying using the platform?
That must be a long conversation, huh?
Yeah, I can chewed their ear off for about an hour, I think.
Very good. And I see some people commenting that eToro should employ you.
Yeah, well, I'm not sure what it is, because I don't really necessarily have the skill sets that are required for many of their jobs. So yeah, I'm not sure what role that would be in.
But you're uniquely skilled at analyzing PIs and finding all the inconsistencies, being the coroner of copy trading, as I dub you. Surely that's something that would be of value to their PI police. Well, I picture a guy sitting behind a desk in eToro Towers, and every time he gets a notification that there's a new FelixFallax video, he has to spring into action and see what's going on with this PI, and does it require further activity?
I'm just happy they haven't shut down my channel or given me some sort of copyright strike or something, or kicked me off the platform. But I mean, it's good that they are obviously able to take people expressing an honest opinion on their platform. Although, to be honest, I do it politely. There's people on eToro newsfeeds who are calling eToro all sorts of horrible names that I won't repeat on here. And so I think that any criticism that I've ever given eToro has been very sort of reasonably and politely expressed and constructively expressed. I'm not calling them every name under the sun. And to be fair, I don't have any major problems with eToro. I think it's a great company and I really enjoy investing there. If I thought it was a terrible place to be, then I wouldn't have so much money on there. I wouldn't spend my time making videos about it. So the fact that I'm doing that shows that I do have faith on eToro. I feel as if money's safe on eToro. I feel as if eToro is going in the right direction. It's improving its product. And any complaints would be relatively minor, although still significant.
Well, here's a question for you. If they did say to you, we want to take on board your thoughts, if you could correct 3 things on the platform that affect all copy traders specifically, rather than traders, what would those 3 things be?
Okay, I've prepared some answers on this one. So number one, and this is not necessarily a change I would make, but it's a change that may be beneficial, is that when you copy people, as you know, you take on the originally invested percentage that they had. So if they've invested 10% in Tesla and that's grown to 20 or 50%, you copy 10%. So you've got a desynchronized portfolio. Obviously, not go to too much detail on that, but most people have heard of that phrase. So it might be a change worth making to have it that you invested at the currently held value. So that meant you were taking an identical portfolio to what the PI had at the time you copy, and then your results would match perfectly from then on. And also your risk score should maybe be based on that current valued portfolio. Because it's a bit kind of silly that at the moment you could have 10% in Bitcoin and that could rise to 90%, but you could still have a risk score of 3 or 4, even if you've got 90% in Bitcoin. So it's based on your originally invested value. But having said that, that's only a potential change. That change would bring problems as well, maybe technical problems too, in terms of the way the platform works, because the current value is moving around a lot, whereas the invested value is a static figure.
Yeah, and the risk score would be moving around a lot all over the place every time.
Yeah, there may well be technical reasons or other reasons why that's not done. But I guess I'm just saying is I know a lot of people, including some PIs, would like to see it changed so that when copiers entered, they entered at the currently held positions, not the originally held positions. Or another way, again, I don't know if this is possible, but maybe if you had a tick box, same as you know how you can copy open trades or not copy open trades, maybe if you had a box where you could either enter at the originally invested value or enter at the current value, that would give you the best of both worlds. And people could choose what one they preferred. So that would be one change. I don't know how possible it is. I don't even know if it'd be better. Maybe it would actually ruin the platform, but that is something to think about. Second one would be tightening up the entry into the PI scheme, like who can get into it. Like at the moment, basically, if you've got one copier and a very small amount of money in your account and you've had 2 months with a risk score of 6 or lower, then bang, you're on. So I think it's potentially a little bit too easy to get on the PI scheme, and there's been some people who have went on it that aren't fit for purpose. And I think it's popular investor. So if you've got one person copying you, I don't know whether to call that popular. If I only had one friend, would you refer to yourself as a popular person? So I think maybe they could raise it so you have to have more copiers. I appreciate the cadet PIs don't get paid, so that's fine. I even saw a PI the other day that had 0 copiers, although I see that he's now been removed from the PI scheme. But it seemed a bit ridiculous that someone was a popular investor and he was making posts to people saying this is a message for copiers, and they never had any because the ones he had left. So maybe it could be a little bit harder to get on the scheme, and also a little bit more ready to boot people off the scheme if they start doing anything like spamming. There's some PIs doing things like posting links to Pi network and stuff, like flouting eToro rules, or obviously there's people being dishonest in their bios, there's people taking ridiculous risks. So maybe like there's one at the moment, I don't know whether I should name them, but it's basically a company, it's not a person. And they are using leverage, but they're saying in the bio that they don't use a lot of leverage. And they've deleted posts that people have made, deleted comments. And if you look at them on Facebook, you can only kind of find like a Facebook page, a property management company. There's no evidence of who these people are. So, I think that they potentially should be booted off the PI scheme because they're breaking multiple of the rules. So yeah, that would be the second change, is to just tighten it a bit more. Although I appreciate the PID scheme do checks on people. If someone claims they've got a degree, apparently the eToro PI scheme can actually check that up and ask for proof of it. So there are checks being done, but maybe just a bit better. So that's my second point, is tighter criteria for being a PI or staying a PI. And my third one would be about maybe implementing a risk adjusted returns stat, such as a Sharpe ratio, that on the PI's fact sheets, the elite PIs have got fact sheets, and sometimes they share them with us. And one of the stats on that is Sharpe ratio, which is basically how many units of reward they're getting for each unit of risk. And a Sharpe ratio of higher than 1 is good, a Sharpe ratio of less than 1 is bad. So maybe, as well as saying what person's return was, it'd be really useful to know their Sharpe ratio, because some of the people like Slow and Steady doesn't make very high returns, but his Sharpe ratio is something like 1.7. So he's actually a better investor than some of the high earning PIs. They're maybe making more money, but their Sharpe ratio is like 0.5 or something. So I think that would be a useful stat to know about the concept of risk adjusted returns, which is far too complicated to go into on this video, but that would be my third change, is to boost up the defensive PIs chances a little bit. It's too aggro at the moment. There's too many of the top PIs are aggressive investors, and I think there's a place for defensive investing in there as well.
Yeah, the Sharpe ratio would be very interesting, but it's only as useful as the data input.
Yep.
Like the risk score. So
exactly.
0.1, change the risk score. 0.3, Sharpe ratio relative to the risk score, or that incorporates that risk score. Talking of policing PI activity, can you foresee a future where the likes of Jared76 don't come up?
Yeah, well, that's a really difficult one, because I think that no matter how stringently you check someone and monitor someone, human beings are prone to emotional behavior and irrational behavior, and you can't really predict. Sometimes it's the ones you don't expect that do something crazy. Jared, you could see, I think he had a couple of 400% winning years, and he was quite erratic. Like, before he put all of his money in Neo, he was changing his portfolio about between being ultra aggressive, and then he was saying he was going to leave eToro, and then he put together a really defensive portfolio that was half of it was in gold, and then he put all of his money in Neo, and he said he was going to stay until Neo hit $500 a share, and then he left when Neo was only $50 a share. Probably good, because it's only in the 30s now. But yeah, he was very, very erratic. And I mean, to be fair, eToro, you can't really punish someone until they've committed crime, so to speak, although it's not crime. But eToro couldn't really have kind of suspended him just based on the fact that he might do something silly. I guess by definition, you can only really ban someone once they've actually done that silly thing. But it certainly was predictable. I mean, I guess one way to prevent it is just don't promote that person. If you can see someone saying and doing bizarre things, don't put them on editor's choice and all that sort of stuff, which, to be fair, I don't think they did. Although I gather at one time eToro was kind of relentlessly marketing Jared when he was in his heyday. So the worrying thing about Jared was he'd been on eToro for many, many years. It's not as if this was a guy that just came in and no one knew anything about him. He had a long track record. So that's what I'm saying is, kind of, even if you've got that 5-year track record, it's not like a magic wand. Someone can do really well for 5 years, but then just something comes along and screws them up. But I think he always was a loose cannon. It's pretty clear by his stats and his comments and stuff. He wasn't the most stable individual, but some people like a risky investor.
Have you bought shares in the SPAC?
No, I haven't, for two reasons. Number one reason is, I gather that at the moment, if somebody buys that, then their copiers don't inherit that position. So that would put my copiers out of sync. So I guess if I was going to buy it, I would have to do it on my second account, which, as mentioned, has got $0 in it because it didn't get transferred. So that's the reason number one. And reason number two is, I wouldn't put myself forward as the next Warren Buffett in terms of being able to value a company based on fundamentals. So from what I'm hearing is that the eToro, the SPAC, is kind of a bargain price, and it could potentially be a good investment. But I wouldn't say that I've got the skills of valuing a company to know for sure whether that's a great investment. I would see it as a gamble. They say, like, if I invest in Apple or Microsoft, I'm pretty sure that their shares will be a lot higher in a few years. Whereas this one, I'm not sure. I'm not. I mean, I guess you'd call it a small cap company, and I mainly invest in large cap companies, so it's out with my sphere of competence. But it's definitely something I could do at a later a later stage. That's for sure, because I've got great faith in the platform and the product that it's delivering.
Two things I'll say about that. One is you just used the word out with. You do realize that that's a Scottish only term.
I did not realize that.
Other people don't say that. Yeah. And I find it really interesting the way Scots folk say out with. It means beyond or
Yep.
outside the scope of, right?
Indeed, it does.
But that's just, by the way, that's just me being my usual pernickety self. The second point is it's absolutely a gamble, sure, to buy into a SPAC. Firstly, before everything's completely signed, sealed, and delivered, although it probably is. But secondly, who's able to value eToro sensibly, given the data available. I bought a few shares myself outside of eToro just because I threw everything I've ever learned out the window, and I just think eToro is really exciting. It's going to be massive. So I want in on that, which is obviously not the way a sober investor thinks. I mean, I want eToro in my life.
Yep.
Just as a customer, but also I just think it's incredibly exciting time. And I think it has the potential to really go far. I think it could shake up all sorts of things and be a huge disruptor. How far do you think copy trading and eToro can go?
Yeah, before I answer that, I would just touch upon, you've made a really good point there. It is good to invest in companies that you've got great faith in their product. And one of the companies I invest in is Betfair, basically Paddy Power Betfair, known as Flutter. And I don't know as much about the stock itself as I do about some of the other ones I invest in, but I really I've used the Betfair, the site, and also PokerStars, which is part of that group, for many years. I think it's good to invest in stuff that you're passionate about. And over a number of years, if you've got faith in the product, usually that investment will work out well. So that'd be one of the reasons I'd invest in eToro as well. So how far can copy trading go? So yeah, I think that eToro is already, over the last year, has accumulated a massive amount of customers. Up to 20 million accounts now, and once they go public and really expand, that's going to grow and grow. And what really amazes me is, even as little as a year ago, PIs. I remember when Jay Nemesis had 10,000 copiers, and he maybe was managing $10 million, and now he's got almost 40,000, and he's managing 150 million. So look at that exponential growth. So yeah, I can see the whole thing being expanded. But what eToro needs to do in lockstep, as well as the PI scheme growing and the customers growing, they need to expand their own staff and their customer service, because there needs to be adequate response times to the service requests that these customers are putting in, and there needs to be adequate vetting of, if there's going to be 10,000 PIs instead of 2,000 PIs, then the size of the the PI team will need to expand to be able to police those PIs as thoroughly as they do at the moment, if not more so. But staff obviously take time to train. You don't just come in able to do the job on day one. So it's a real challenge, but I'm sure eToro's up to the challenge of doing that. And obviously the software, the infrastructure that runs the site runs on, needs to not be put under strain. And I think changing the minimum copy amount to $2 instead of $1 really seems to have stabilized the platform. There's been no crashes or trades being failed to execute and stuff. I think that it's been a lot more stable since that change was made.
Yeah, you're right. They have a lot of work to do. But I was thinking about this the other day. Anyone who knows anything about business or has run a business themselves knows that when there are huge projects underway or big things, big changes happening in your company, it's very easy to let the day-to-day stuff suffer. And in the short time that I've been involved in eToro, there have been three enormous things happening. One is the massive increase in users,
Yep.
the huge rise in popularity and the strain that puts on the architecture.
Yes.
Two is the whole story with GameStop that affected all of these brokers in the same way, caused lots of problems,
Yes.
caused lots of ill will. And three is all this time they were preparing to go public via this SPAC, which involves a lot of work going on in the background.
Definitely.
Nobody's aware of. So those are three enormous challenges that all were on top of eToro in the past few months. So, I'm prepared to cut them some slack for customer service and the odd technical hiccup.
I think you make a key point there, and this is why I'm loath to criticize eToro too much, because we don't know what goes on behind the scenes. And remember, we are in the midst of a global pandemic as well, so I know through my own employment and stuff that people transitioning to home working and the increased amount of service requests. It's not easy to keep on top of this stuff, and they are human beings. And I've spoken to as I say, the PI team and the product development team. Everyone's doing their best. Everyone's highly competent, but no one could have predicted a pandemic and then a huge influx of customers and then this GameStop fiasco. So all this stuff has been going on. And yeah, obviously sometimes things like waiting times for customer service do suffer, and the news feeds are not maybe as well moderated as it could be, but you got to kind of give them a chance. It is, you can't compare them to another platform. Like Trading 212 doesn't have copy trading, and Trading 212 doesn't have a news feed. So it's a hell of a lot more difficult to manage a site, and it's going to come under a lot more strain, because every time J Nemesis, for instance, buys a position, then there's 37,000 other people putting in an order for that position. So that is hugely complicated. And for someone who doesn't know about IT like me, for someone who doesn't know about business management again like me, we shouldn't really criticize, because these are challenges that any business in the world would struggle to cope with. So we have to just give them a bit of slack.
Are there other areas of copy trading you think haven't been given enough coverage or focus?
Yes, well, I feel that a lot of the attention and also a lot of the eToro editor's choice is on the big name PIs and the same old names and faces, but there are definitely other things going on there under the surface. For example, I'd like to quote a trader called Strength Trading, who sometimes posts on my videos and also on my newsfeed. And he's put together what he calls a whale portfolio, and he's used a methodology to try and put together a portfolio of, I think, 60 odd traders, and they're not all PIs. There's some PIs, there's some non-PIs, and he's really used his own stock screening or PI screening rules and put together a portfolio. And there's some people there who actually may be better than some people who are PIs. Not everyone who is really good trader becomes a PI. I covered a trader called Key Tateshi on one of my videos who is not a PI. But if you look at his performance, he's actually got something like 7 years of winning record, and his record's better than most PIs. So I think there is a world beyond copying PIs, and it is a risky business because they don't have the same skin in the game. But there could be value in copying people who are not popular investors, and money to be made doing that. But it's a little bit like trading in junk bonds or something rather than government treasury bonds. You're taking a bit more of a risk by doing it, but that's definitely something that maybe could be given more coverage as copy trading of non-PIs.
Well, Strength Trading sounds very interesting. And I've seen his comments on some of your videos, and many of the other commenters in your videos are copy traders who are obviously very engaged in the process and would offer a lot of value if they were to come and have a chat with me. So perhaps you could reach out to some of your legions of adoring fans.
Definitely, I'll put a rallying call, and when I mention your podcast on an upcoming video, I'll mention that you're keen to really have more guests on the show, especially copy traders. That's the key type of guest that, following your excellent interview with Victor, it'd be great to have a few more of those into the mix, because they're actually not armchair critics. They're doing the copy trading that we're talking about. You're doing it as well, but they've got first-hand experience of it. So who better than them?
Well, thanks. I'm glad you agree with that approach. Is there anything else you think I could do here at the podcast that would add value to copy traders?
I think you've got the perfect format of having those 4 types of guests. Of you got YouTubers, copy traders, PIs, and even potentially people from eToro. Although I gather you're still thinking about that. But having those 4 different perspectives, that's all of the stakeholders, that's all of the interested parties in copy trading. So by having everyone's voice, then you're really getting a balanced overview. And of course, the episodes where you're doing a monologue, which are really enjoyable as well. So having those 5 viewpoints, it makes your podcast extremely interesting to listen to. I really enjoyed every single episode for different reasons, and even the ones that have lasted an hour, the time has flown by, which people listening to this may not be thinking after having heard me drone on for an hour or whatever it'll be. But yeah, I've found that it's extremely engaging and relaxing listen to one of your interviews. And so, yeah, just keep up the good work. I don't think anything major needs to change.
You've always got a second home here at the Copytraders Clubhouse.
Thank you. I'll bring my golf clubs next time.
You're an honorary member. Well, the golf course isn't quite finished. There's still some construction to do. The sand is coming next week for the bunkers.
Fantastic.
You're always welcome back, Andrew. It's been fantastic to talk to you today. Thank you so much.
Pleasure has been all mine. Thank you.
That was the first of what I hope to be many great appearances by the man behind FelixFallax. In terms of penetrating insight, very much the leading eToro YouTube channel, although he would never say that himself. Neitszche, however, may have been describing the channel when he said, "Sometimes people don't want to hear the truth because they don't want their illusions destroyed." On the next episode, we meet the third of my PIs and one whose results for me have suddenly sprung to life.
March had a lot of volatility throughout, so I like to profit from that. So this is why, even though in this particular month we didn't see a crash, the portfolio still performed really, really well.
Thanks for listening. Until next time we meet at Copytraders Club, I wish you many happy returns. Obviously, anything you hear in this podcast is for entertainment only, not financial advice. Do your own research. This is just generic chit-chat. We don't know your individual circumstances, etc., and so forth.